This is Bazaar Morning Call. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
It's a Wednesday morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Morning, guys.
Hi, Prashant. Morning. Good morning, Nigel. It's been bright and sunny on Dalal Street lately, right? I mean, the sun is shining. Yesterday, the markets ended well, and now we're less than 200 points away from those all-time highs. So let's see how things progress today.
And we're halfway through the week, so let's take the action head on.
Absolutely. You know, the thing with the market seems to be that, for the last couple of days, like, for example, same time yesterday morning, we were saying how the market was not sustaining at high levels. So then we got a bit of a break. But yesterday, we did not get any follow-through on the downside. The market actually jumped. And that's the reason why I think that we are still in a phase of a bit of a flux. Is the market going to... We are very close to all-time highs. We're practically there. So either, we build on it strongly, and the market goes a bit further in this current leg, or I think we see a pullback, which is what it was looking like till day before yesterday. So we'll perhaps know maybe today and over tomorrow, because we've got the RBI decision also coming up, which we'll get to in just a bit. Now, overnight action in the US is only slightly better. The S&P was up about 0.25%, but, neither here nor there. Yields and dollar cooled off a little bit. The yields came off 7 basis points. They'd rallied about 20 in the prior two trading sessions, so some pullback there. Dollar index has also come off about 0.25% at 104.17. All in all told, this is not a bad kind of screen to wake up to from a global perspective. You had Fed commentary, and, even in the US, it's a bit of a flux about interest rates. The consensus was that the Fed will cut, and they'll cut in a matter of time, maybe not March, maybe in May, maybe in June. But increasingly, lately, we've started to hear many from the Fed stable, starting to sound more hawkish. So this is Fed's Mester. Now, she's historically been a hawkish member. She said it would be, and I quote, it would be a mistake to move rates down too soon and too quickly without sufficient evidence. So that was one. But there was also another gentleman, Kashkari, who recently sounded pretty hawkish. And yesterday in the overnight comments, he actually walked back some of the hawkish buyers. So it's not clear at this stage, because data has come in so strong. The jobs data, the ISM services number, and even before that, string of very super strong data points, which have forced the markets to walk back on their imminent rate cut expectations, and now actually even talking about whether we should only expect the first cut sometime mid of 2024. Now, just to circle back to the levels here, for the Nifty, the downside level is the 40-day exponential moving average. To my mind, that would be, in a way, the decider, whether the market wants to build on the way up, or, there is a bit of a break coming. So 40-day exponential is about roughly 21,400 is that level. A break below that will give us a confirmation one way or the other. The Nifty Bank saw another move down. It's the weakest, of the lot. It's not participating on the upside. It's underperforming on the downside, as I said earlier. And on the way up, the Nifty Bank daily average is around 46,288, which should be the resistance. And on the downside, the previous low, which is 45,071, the recent swing low, that's the support. And of course, the big one is 44,429, which to my mind, looking at the price action, at least anything can happen, seems more likely than not that we will revisit once more. We're not very far away from either of those two levels as we look at the Nifty Bank. The GIFT Nifty will come up on your screen, and it'll give us an indication, another 100 points. So maybe, this is it. In this leg, the market moves higher and does not give up too much to the bears who've been on the prowl, hoping for some pullbacks along the way. Sonia?
Oh, absolutely. And, the GIFT Nifty is indicating that the market may get to those, all-time highs. If you just look at the numbers, right, the Nifty is now less than 200 points away from that all-time high of 22,126. So the market trend has been on the upside. Of course, it's been very volatile the last couple of days, no two ways about that. But once again, the buy on dips is working out. Yesterday, you had the Nifty IT index, the Nifty Pharma index, and the auto index all hit record highs. So these are the spaces that are coming back in a big way. Both foreign and domestic institutions bought in the cash markets yesterday. FIs bought about 90 crores, while DIs bought a little under 1,100 crores in the cash markets. Now, there's the RBI policy tomorrow. That's on the 8th of February. There's no rate cut expected this time around, but any commentary on monetary loosening will be watched for very closely. So that's the next big event to watch. I'm also looking out for a couple of these new age platform companies that continue to trend higher. Remember, last week you had the likes of Delivery and PB Fintech that turned profitable. Today, Nykaa will be in focus. Good set of numbers is what the company has reported. A 22% revenue growth. The profits have doubled on a low base. And maybe, you could once again see some of these names like Delivery, PB Fintech come back into action as well. I'm also if you're looking out for individual stocks, then PSUs, remember, they continue to outperform. But there are some signs of profit booking in the PSU space. So yesterday, the PSU bank index was down 1%. So perhaps you'd want to just keep an eye out on that as well. And there are 3 IPOs that are open for subscription today. There's Jana Small Finance Bank, there's Capital Small Finance Bank, and Rashi Peripherals. So we have our hands full in terms of primary market action as well. But today is expected to be a very strong opening. Let's see how the second half of trade pans out. But what are you watching out for?
Well, Sonia, overnight, actually, I was looking at a couple of US results, and you had Ford that was up close to around 6%, and you had Snap that was down close to around 30%. So we're getting some violent reactions even coming out of the United States as well. But let's get back to our own markets. Well, yesterday, we had a pretty good close in the Nifty Financial Services Index. That played out the expiry. So at one point of time, it was a little under the weather. It virtually ended at the high point of the day. So there was an element of expiry that did play out. Today, the Nifty Bank as well will have its turn out there. Besides that, what did the FIs do yesterday? As they've been doing for the last few sessions, they added more long positions in comparison to shorts. Now the short positioning has come down to roughly around 60,000 contracts. And in terms of percentage, it's down to around 63%. That compares with the highs of around 78-80% that we saw earlier in the series. The options data as well comes up for you. Well, out there, we saw a good amount of writing. The 21,900 put, the 21,800 put, both of them added more than 70 lakh shares between them. And the premiums on both of them from the highs of the day, they came down by half. So in an uptrending market, you want to see put writing. That's precisely what you saw. The call writers, they ran for cover. There was big unwinding out there. So you had the 22,000 call that was getting written very aggressively. They ran for cover, and also the 21,800 call as well. So that's telling you the call writers, they're getting a little bit nervous with the kind of momentum that we're seeing on the Nifty. Well, moving to levels then that I'm looking at. Well, the Nifty as well as the Nifty Bank, you'll want it to protect both these two levels on a closing basis. So for the Nifty, I'll say the uptrend is very much intact. And in the near term, you don't want it to break this 21,600 or the 20 DMA, which comes in at around 21,670 approximately. And the Nifty Bank, that's been a little bit weaker among the two. But as long as the 100 DMA doesn't decisively get broken out on the downside, well, you'll see it's pretty much fine. And you're hoping that at some point of time, it starts participating in this rally. The stock that I'm looking at is Shriram Finance. The reason I'm looking at it is, the last few sessions it's gone ahead. It's closed above the 20 DMA, which is always a good sign. Besides that, a few more factors that are played out. Yesterday, there was some mild short covering that we saw. And the delivery volumes yesterday on the NSE were better than what we saw in the previous two sessions. Besides that, most brokerages, or Nuvama at least, they have come out with their note. And they are saying that it's a likely inclusion in the month, which is announced in February. So it could come into the Nifty. So that's another factor. And valuation-wise, well, it's fairly attractive in comparison to some of its peers. We had the management who joined us as well. They were confident on growth, on their NIMs, as well as on their asset quality going ahead. And valuation-wise, it has some support. So I think for the remainder of February, this one should be on your radar, guys.
All right. Thanks a lot for that. So lots of stocks in focus in the market as well. So let's get straight to some action. Lawrence Belanco of CLSA says, as outlined earlier, the risks of a correction/consolidation pattern are growing in both the Nifty and the mid-cap sector. He says since the price momentum divergence at the Jan 16th high, the Nifty has been oscillating around its 20-day moving average, which has resulted in a narrow range between 21,100 and 21,137 and 22,100. So it's a very narrow range that they're looking at. A break below the 50-day moving average would signal a deeper correction unfolding, with the next support seen at 19,743 to 20,196 area, provided by the 200 DMA and the September 2023 high. On the upside, he adds, a break above 22,100 will open the door for a run at the 22,850 to 23,000 area.
Well, let's get you some money market views here. Kunal Sudani of Shinhan Bank says expectations of Fed rate cuts began to wane after the US Fed's hawkish hold is justified by a robust jobs report and continuous strong growth in the in Q1. He says this is favored yields and dollar index in the last few sessions. He says several other Fed officials will be on the wires during the week, and they may dictate the pace of the US dollar as markets await fresh economic reports. The USD INR 82.9 to the dollar acts as a support, while 83.2 to the dollar is the resistance.
All right, and on the bonds, Neeraj Gambhir of Axis Bank says the India 10-year benchmark bond yield retraced part of the move earlier this week after the sharp up move in US yields on the back of strong non-farm payrolls data and higher average hourly earnings. He says rate cut expectations from the Fed were moved back from March to May to June post the data. He says the curve traded with flattening bias as a longer tenor bond saw continued demand from insurance companies. For the rest of the week, Neeraj says markets will take cues from the RBI MPC and the incoming global data, and he expects the 10-year benchmark bond yield to trade in a range of 7.07 to 7.12%.